Welcome, everybody. This is Tesla Today, and we have Jeff Lutz joining us. He does that every Monday. So, Jeff is actually a very senior executive who has worked at all the top 50 companies. He specializes in supply chain and manufacturing. And today, we're going to be talking about this this plan and effort that there might actually be more affordable price cuts on electric vehicles. There is legislation for Robotaxi, and we're going to talk to Jeff about his opinion on what's going to happen with Tesla stock based on all the economy and the crisis that's happening. All right, Jeff, welcome. Thank you so much. And you were right. So FSD did show up this weekend, and you got the chance to see it, right, and test it out.
Yeah, it downloaded to one of my cars. I did one drive, to be honest with you, and I don't like necessarily reporting on a sample size of one, so I was very clear to say it's a sample size of one, but it was really, really good. And it was different than the reason it was different than prior releases is it was very confident in terms of like lane positioning, turns were not as jerky. And the kind of the hesitation you do to, like, I had an unprotected left, everything flowed really smoothly. It felt different than prior releases in terms of confidence. And I had no interactions, on the entire drive, nothing to intercept or deal with, and it was really good. So I'm going to drive it more today and look forward to it. But it seems like it's taken a significant step forward. Like, this feels different than the 1069 series. It feels noticeably different.
Yeah. I mean, all these things continue to improve. For us who've been following it every day, we kind of think it's going very slowly, but it's continuing to improve. So version 11 is a step change. We know about this. It's going to be a single stack. And Chuck Cook says that it's a very solid build, and your first drive felt that way. We'll see what happens in the coming months, but this is yet another move forward. And so that's part of our theme today, actually, is that there's these movements that are happening in every aspect that's really favorable to Tesla. And so let's talk about a few of them. So the next big topic is Adam Jonas came out with this write-up today, and he said why Tesla's price cuts are rational and that they believe it's not a fad and will continue moving forward, right? So he says that while subject to volatility, investors should anticipate further price cuts in EVs, with cost leader Tesla setting the tone. And then their whole rationale is that this is actually competitive behavior, and that's what they expect to continue to happen. And I've been saying the same thing, I think you have as well, that we're going to see further price cuts, not just what we saw this year. So some of the information or reasons why they said, one is cost. So they think that, I think cost and standards are basically the same, but basically saying that Tesla has a scale and cost leadership, and they're going to continue doing innovations in manufacturing to continue to drive deflation in EVs. And same thing with standards. They're creating new ways of, the efficiencies in the manufacturing. And in the competition, I don't know about this, but he said that if Tesla doesn't do it, Volkswagen just released their $20,000 Euro price point. And this is kind of like where the industry is headed. This is the top three. Before we get to the next three reasons, what's your reaction to these three?
I mean, first off, Volkswagen released a PowerPoint. They didn't, there's no know-how in terms of like, what are they doing to get to that price point? What cost structure, what gross margin? So, it's great to see like more announcements, but we really want to see like how they're actually going to get there from a sustainable gross margin perspective. One concept I haven't spoke about in as it relates to cost structure, I think would be very helpful for the audience. And when people talk about Tesla's scale, it's not the absolute volume; it's the certainty in demand on all of their suppliers and partners. Meaning, like when Tesla gives you a demand signal, they're taking everything. Unless you screw up as a supplier, they're taking everything you can build. And the other big concept I haven't talked about is many, if not all, the OEMs are flat to declining in terms of volume. And what happens when you're flat to declining in an industry with volume, you play games at the end of every quarter where you don't want to hold a bunch of inventory and you push it back to suppliers. And there's this game going back and forth. And what happens is you get quote unquote supply issues from suppliers because they're playing the game with you and they're trying to guess like, hey, is GM going to cut their demand signal in the last 2 weeks? Then we're going to shut our line off early too, and we want to get ahead of it. And that's why you can start seeing these quote unquote demand issues with the other OEMs. Tesla, on the other hand, is trying to build more cars every single quarter. There's not even a seasonality thing that Tesla's working in. They're just every quarter they're trying to build. Not trying, they are building more cars every quarter, and the fact that they're not flat, the fact that they're growing every quarter, that is the scale advantage in their cost structure. That's going to help them. It's going to minimize inventory, and it's also going to send a message to suppliers. Like when we send you a demand signal, we're taking all of it. And oh, by the way, we want your best cost every quarter. We're going to come with our handout.
Yeah.
Yeah. So, I mean, on the cost side, if we go back to this, the other way that Tesla is getting there is they are driving what's called event-driven cost reductions in their manufacturing process. Meaning they're not just taking the MSRP down and taking the hit. They're getting those scale advantages I just spoke about, but they're also going into the design and they're going into the manufacturing process and say, all right, I've learned a lot building hundreds of thousands or millions of these configurations. Can I bring supplier number 3 in to make supplier number 1 and 2, compete with that supplier? Can I change the design to simplify it? Can I remove a process in the factory? So Tesla is stepping down their cost structure. And it speaks to one of the other advantages Tesla has is they run a model or called a SKU, an SKU. They have fewer of them and they run them longer than most OEMs do. And when you do that, you get more and more cycles of learning where you can do those event-driven reductions, and you get more quarters of decline on a particular part number with a supplier. Meaning when they when you enter in an agreement with Tesla, instead of you're buying the thing for 8 quarters or 12 quarters, you may be in business with them for 40 quarters, depending on the part. There may be original Model S parts in there from 8 or 10 years ago. So anyway, it makes what does Tesla do in each one of those quarters is they try to drive reductions with their suppliers. So anyway, not to get too wonky on that, but the minimal SKUs that Tesla has also really helps their cost structure and the event-driven action.
What I love about this note from Adam Jonas is that it's a sign that these analysts actually listened and they heard Tesla's Investor Day. And they're now realizing that, I don't know what took them so long, but Tesla's manufacturing kind of focus, the factory is the product, and their ability to continue to improve, like you just said, everything you just said about their cost structure and so forth. So cost is going to go down because of manufacturing. And then they say, well, there's going to be tremendous more competition. The other reason why they're saying that there's going to be competition in the lower price point is because of affordability. And they're saying that, their discussions with auto dealers is suggesting that, customers are having sticker shock. And so there is a gap in the market for $25,000 vehicles because it represents $400 of monthly payment. So that's one, there's going to be a massive market. I don't know if that's new. If it's anything new, right. I'd like to see what your thoughts. Is that new now because of the economy? Is that always been the case? And then they're saying that supply versus demand, there is no longer the chip shortage. That's moved into the rear view mirror. And so there's actually a greater supply. The supply is recovering relative to demand. And then finally, we've been talking about this last week, which is the falling lithium prices. So we've seen that, Elon has mentioned that he's seeing that the supply chain is getting cheaper as well. So they're able to pass that through to the customers. What's your thoughts on these three?
There's a number of things here. One, on the affordability side, I mean, I tweeted this. There must have been 1,000 commercials during the NCAA tournament for all the different car manufacturers. Nissan, Ford, GM, Stellantis, all of them. And they were played over and over. And what they were showing is they weren't talking about the MSRP of the car. None of them did. They were talking about the financing you would get and the monthly payment. So they've taken this down to like, we're not going to tell you, just like this what the mobile phone industry did as well. We're not going to talk about the fact that a a new Galaxy S23 Ultra is $1399, which is like two smartphones from 7 or 8 years ago. We're not going to talk about that. We're going to talk about the monthly payment because we're going to subsidize it with you. And I saw all the interest rates were between 0 and 4%. So when we're talking about a Fed funds rate approaching 5, and then these obviously what they're doing with their financing arms is they're taking, the fact that they really can't take their cost structure down as quickly as they like. They're leveraging their financing arm to kind of give a better deal, to consumers versus taking the cost structure out of the car itself. So that's what's happening. And it's interesting because one of the reasons for the major price reductions from Tesla is like the total cost to a consumer over 72 months has grown. And this is what the other auto OEMs are trying to do. They're trying to control that financing piece, but I think they can only do that for so long until those leases expire, and they're going to have kind of all these stranded assets at much lower valuation than what they're worth 3 years later. So that's that piece. And if you pop the table up, the second one, the 3 paragraphs we were looking at. I've talked about that. There hasn't been a chip shortage, for over a year. Really, to be honest with you, if you know what you're doing, there hasn't been a shortage, for over 18 months. If you know what you're doing,
that's right.
If you don't know what you're doing and you have a demand issue, it's belabored. But I've talked about this ad nauseum. The lithium prices are still not back to 2020, 2021 levels. They're still elevated. I think that is synonymous with a pretty big uptick in demand. How many EVs were being built 2 years ago versus today? So I think Tesla is going in the right direction in terms of what they're doing. And these prices will continue to come down. If we do enter, a real recession, these prices will crater. And but they'll continue coming down, but they're still not back to 2020 levels.
Yeah, Charles says that Legacy Auto has a supply problem. Too many cars in the supply chain. They can't sell them and are having to shut down production. Any a comment on that? Do you know anything about this?
Yeah, I mean, there's been multiple factories announced from GM this month that have shut down and are continuing to be shut down. There's a rumor that BYD factories are working 4 of the 7 days or 4 of the 6 days. Usually you can work 6 or 6.5 days by Chinese law. So anyway, there's at least 2 or 3 days shut down on the BYD factories. Again, rumor. There's data that says that there's inventory buildup.
Okay, we're going to be talking about how the economy is and all the things that are happening, the crisis, the financial crisis. You'll share your knowledge about that shortly. Yeah. But other than that, there's all these things that we're talking about that's looking really good for Tesla. There's another one that came out, which is just yesterday, I think it was, that there was news that Mary Barra, the CEO of GM, met with 2 senators to push for legislation to speed the deployment of self-driving vehicles on U.S. roads. So that's great news because we want as many CEOs of auto manufacturers pushing for this. And so she met with Maria Cantwell and Gary Peters to kind of try to improve these regulations. And so it says here that for 6 years, these legislation has been trying to ease regulations, but it's not been going anywhere. So this is what kind of the statement that they made was, we must act to ensure U.S. manufacturers can compete with countries like China, create jobs here, and improve road safety. And, they represent Michigan, which is, where GM is based. So that's good that Barra is doing this. GM has their self-driving unit called Cruise. And so they want that to be, testing in other cities as well. So, yeah, what's your reaction when you hear, that's Barra's doing this?
Yeah, I mean, this is where she can add tremendous value given her ability to influence. I mean, she convinced Washington, D.C. that GM was the leader in EV. So if she could do that, then I trust in her ability to be able to help us out on these regulations, which is sorely needed. I mean, what you're really trying to do here is you're trying to move the ball forward, and it's not going to be perfect as an OEM, as a creator of this software, as a creator of this service. This road, it's not going to be perfect. There's going to be issues. There's going to be traffic jams created. There may be some injuries, hopefully no fatalities, but you want to know that you're kind of moving the ball forward in a gross manner in terms of, increasing overall safety, reducing serious injury, and reducing the cost per mile driven.
Yeah. What I'm a little bit skeptical about is that, we know that Cruise has these cars out there, and it's good that she's doing this, but it could also be just PR for her side, which she's done very, very well, position GM as a leader, and they're doing self-driving. But then what she might do is kind of help shape the legislation so that it kind of favors, their geofenced kind of Cruise kind of self-driving versus a little bit more of what Tesla's trying to do. And so if she does her job right and she kind of is able to maneuver things, it could be kind of a negative for Tesla. So hopefully, Tesla has our own kind of consultants out there.
Yeah, I mean, there are people, by the way, I know people believe nobody from Tesla works with Washington. There absolutely are people with that title in Tesla do that work. And the fact that I think Elon 2 months ago met with the head of Congress and the minority leader, the top two people in Congress, tells you he has the right access to have the right conversations at the right time. I feel good about that.
Yep. All right. So this is long and dear to my heart, talking back about the Tesla stock, and I want to hear your opinion on this. So Gary Black this morning said that with a 50-50 chance that the Fed will pause its year-long interest rate hikes, that's going to happen on Wednesday. They're going to make that announcement. Thinks that growth stocks seem poised to run higher. As you know, Jeff, I've been the person hoping and praying that we're going to start actually have a pivot so that growth stocks can go crazy again. And said it's the growth names are the ones that are profitable and that trade 30-35 with pegs less than 1.5 could be the biggest beneficiaries.
Yeah, I agree with a couple of comments on this. One is the Fed is either going to pause or they're going to do a 25 hike, and they're going to indicate we're going to look around and wait. So it's either a very small hike, which they're probably going to have to take off in 3 or 4 months if they are going to start cutting this summer, or it's going to be an outright pause. But either way, they're going to leave. They're going to walk out of that press conference. I believe this is, again, do your own research. I believe they're going to walk out of that conference saying that they've done the job on inflation. If you look at what's happened with this banking crisis, this hysteria that's been created, which is also very real. There's real runs on banks. There's 5 banks that have fundamentally failed, and there's probably more behind it. This in itself is probably worth 3 to 4 rate hikes in itself. Just that one event or playing out over the past week, just because of what it does to people, and should I be spending money? Yeah. So you factor that in, and then you factor in either they're going to do 25 and pause or pause outright. And Gary's point is this is usually good for growth stocks. So they want to see the end of the rate hikes, and they also want to see the beginning of the rates coming down. And you're getting an advanced or accelerated view of that. The other thing I'll say about growth stocks is they were the first into the woodshed. They went in and they got hit hard. And some of our stocks nearest and dearest to our hearts got hit very hard, during this downturn. So yeah, it makes sense that they would be not only the first to come out of it, but also from a rates perspective, they could do quite well in a stable, if not declining rate environment. The thing we have to watch is we have to watch the recession piece. We have to watch the jobs piece. We have to watch what's going on. Are there other shoes that haven't dropped that could drop? Is it the real estate market? Is it more banks? Those are the things that could really drive some volatility in the near term. But if the Fed has the ability to pause and actually before a formal recession hits, I mean, we're going to leave this quarter hopefully with greater than 2% GDP growth in the quarter. It's certainly not zero. It's certainly not negative. If they can actually start engineering the slowdown in rate hikes, if not stopping, and showing the path to cutting, they may have actually, taken this very small landing strip and figured out how to land something on it. But again, it's too early to say. And again, nobody thought that these bank issues were happening 2 weeks ago, and all of a sudden they came out of nowhere.
Yeah. So 2 points I want to make. One is that typically strong companies that are growth companies that have good balance sheets, they're the last to fall. And so Tesla and Apple, as was shown last year in 2022, they were the last to fall. They were holding fairly strong compared to all the other growth companies, the mega cap companies, until September. And then, of course, Tesla had not just fell, but it fell, outsized fall. The second thing, though, is that they are the first to rise. And so as soon as there's a sense that there's a pivot, these growth stocks are the first, these strong ones are the first ones to come in. So last to fall, first to rise. And that's the kind of companies I like to invest in. And I feel like Apple's been like that for decades. And I'm hoping that Tesla is like that as well, will behave similarly. The other thing I want to point out, though, and this is kind of reflected here in that first statement. So this is a reply to Gary's tweet this morning. This person had read Mercy said, hasn't every time the Fed pivoted, it's followed by massive declines in the market. And that is correct. So there's actually a table that I shared before where you can actually see every time that there was a Fed pivot, the next 3 to 6 months, you don't see growth stocks and you don't see the stock market just skyrocketing right away. It takes 3 to 6 months. And in fact, there's a 15, 30% decline in the stock market after the Fed pivots. That's what we've seen historically. Gary replied saying the cause and effect is different this time. The Fed caused this break by raising rates too fast. Normally, the Fed pivots after we've entered a recession. Here, the Fed can still navigate a soft landing. So he's saying this time might be different. What's your reaction to this comment?
Yeah, and that's what I agree. I agree with that. If they can, it's different.
Wow.
When you don't actually enter into a recession and you're cutting because you're in a recession. If they can cut, if this banking crisis is not a recession and it's controlled, there's a chance. I agree with Gary's comments on this, and there's a strong chance that it could be averted. It's still very messy, and it's still, I would say, it's going to be highly volatile. The other thing, back to Tesla and the name, we're we're about 10, 12 days away from the Q1 delivery number as well. So there's also Tesla specific news. We'll get a couple of China data points as well. So there's some Tesla specific news that could be sprinkled in there. But I think the news throughout the quarter on Tesla is they entered the quarter very strong from a gross margin perspective, had the ability to move pricing down, drove up production to what they reported as drove up demand to greater than 2x production, what they reported. And they've really put themselves, I believe, in a good position. I believe them when they say they're going to keep gross margins greater than 20%. Why else would they guide that if they didn't have confidence in that? So, and then all the announcements throughout the quarter have been factory expansion, new factory. And then you had Investor Day. You've had nothing but expansion and growth come out of Tesla's mouth this whole quarter.
Yeah. So are you thinking Q1? Are you thinking that Q1 might actually be a catalyst for the stock?
You know what? I think it's going to be solid. I'm not 100% sure. I'm not one of the people that count, the ships leaving the harbor. I do triangulate data. There's some really good accounts out there that put data out there. But it could be solid. When you're in an industry like a consumer discretionary industry, when your Q1 is equivalent to your Q4, you're actually quite a strong company when you can do that, when you have really almost no effects of seasonality. So, let's see. I think analyst consensus has come down a bit on the quarter, and that'll get updated probably within the last 5 to 7 days of the quarter. Again, but if that can get solidly below 420,000 units, I think Tesla has a chance to beat on that. So, and then again, I look at the catalysts ahead. You have the IRA isn't changing. In fact, throughout the quarter, the IRA opened up for Tesla to include more models. And the EV adoption curve, there's no data that says there's no reason that the EV adoption curve would change. They're better performing vehicles and the value per dollar. So with those two things in mind, I think it's good to keep dollars parked in the EV space, and Tesla's the leader there. There's no question about it.
Yeah. So let's talk. Q1 is going to come out a month from now, right? Usually it's around the third week of April, correct? April 20th. And like you said, the IRA, they've kept up the sales. The sales volumes will likely be record volumes, as Ethan is saying here. He says flat earnings, though. I don't think it's going to be flat. Maybe. Okay. I'm still hopeful. I'm hopeful, like all the things you said, that despite the price cuts, they're going to be able to show some, margin surprise is what I'm hoping for. But if the economy, if something with the macro improves, at least, like you said, either pause or starting to show things are moving better, that the financial crisis is held and kept, kind of, there's a view that's not going to go crazy anymore and fall, give a surprise, then I think it's set up well for Tesla to finally rebound and start getting back up again, right?
Yeah, no, I think it is set up well. There's just risk when the amount of volume that Tesla is moving per week now and per month. Here's the thing. In the last 3 or 4 quarters, Tesla has taken the percent of shipments in the last month down from, I think it was 71% in Q2 of last year into the 60s in Q3. And I believe it was in the mid 50s in Q4. You want to see them taking that significantly down to where it's, it's closer to maybe 40%. Because usually that last month there is a push, but the closer you can get that final month down to 35% is when you've got a real, you've got real stability and you've got just a great, stability and product line pumping out. So the reason I bring that up is that's when you run into issues of, oh, this ship didn't make it and there was 4,000 vehicles, or that didn't land, or this didn't happen. Then you have all these big variances. But I think once they get a greater percentage of those vehicles into the first 2 months, which is what they've been doing, that's what Tesla's announced. Like, we're getting rid of this delivery wave, and you see it in the data. I think as they do that, the quarters will be more predictable. But the other thing that will make it less predictable, just on the other side of that, is just the number of factories and the number of nodes outputting, vehicles now. And it's going to be more difficult, I think, for some of the folks that track this. Unless the tool set improves, it's going to be actually difficult to track. But I think Tesla is doing well. And I think they have the lever to even do more price reductions if they need it. But I believe what they're going to do in the second part of this year is they're going to introduce new model variants at lower, where they're going to purposely go in and delete a process. They're going to down spec it maybe a little bit, and they're going to hit different classes of buyers.
Yeah, thank you, Jeff. Thank you. That's what I've been hoping for. That's what I'm predicting, that there will be new variants, lower price Model 3. There's no need to wait for something. They'll be able to do it. Okay. So let's talk about the environment, the economy. And you have been, the great knowledge about this. So let's kind of wrap it up. I like David Sachs talking about this, saying that we've had 5 bank failures in roughly a week. Silvergate, SVP, Signature Bank. He considered First Republic Bank to be a failure, despite it being propped up by 20 other banks, or is it 12 banks, 30 billion?
Yeah.
And then Credit Suisse, right? There's clearly a larger phenomenon going on here. Tell me what you're thinking. How is this impacting Tesla, the stock?
Yeah, I mean, I think there's probably a handful of reasons why this is happening. First off, it comes down to the management of the banks and their management of their own risk assets, and that has to be kind of the primary foot forward in terms of like what's happening here. But right behind it, I think a close number 2 has to be what's going on with the rate hike cycle. This is probably arguably the fastest rate hike cycle since World War II. I know we had the Volcker years where they went up to 20%, but I mean, in terms of this is just an incredibly fast cycle for rate hikes. And what that does is that drives a level of uncertainty of like, I bought assets, or I bought mature assets at X percent maturity, and now they're worth, less, maybe, half or nothing they can be sold for. So when these banks have to mark their assets to market is when they basically go upside down. And I
Yeah.
used a joke of like, consumers are writing a check and the bank will bounce, because that's actually what's happening. Is that
Yeah.
there's no money for your deposits to come through. So there's a couple of key reasons out there. I would say there's an oversight issue happening with local Fed, Federal Reserves. I think there were some pretty easy tracking mechanisms that could have been, you could have looked at and said, wow, there's actually an issue here going on at SVB. But this is a little bit of Monday morning quarterback stuff. But I think there are some pretty easy
Yeah.
things that could be done. But I think you have to go back and you have to look at the rate hike cycle. And the final thing, if there is a fourth, maybe fifth thing, is there is there are bank runs. There's depositors in mass pulling money out, and that's more of a it's more of a symptom. It's not the illness. It's they're experiencing this concern or this hysteria, and they're going and pulling their money out. So now it's 5. Now you can go through and take this similar lens and put it across hundreds and thousands of other banks and figure out, which ones are in trouble or there's a concern with. So I think we've got to work through this cycle. I think there needs to be some stability, hopefully soon. The FDIC, the Fed, and the Treasury can do a lot here. I am a bit worried about international banks. I believe that there are, we saw Credit Suisse play out over the weekend. I believe there's several more, just given, their interest rates haven't run up as high yet, and they're still hiking. So I think we got to work our way through this banking crisis. But in terms of Tesla, there could be some momentary blips, people being concerned, like, hey, if there's a run on banks, let's say my money's in that bank, right? A lot of people in California banked at SVB or banked at First Republic. And, if they're concerned if their money is going to be there, it's going to be safe, they're probably not going and buying a car. But, that's neither here or there. I think those could be small, isolated situations. But if it persists, if it goes on for many, many weeks and there's not a clear backstop from the government, that's when it could actually start weighing in on large asset purchases.
Okay. Well, let's hope that the Fed truly does treat this with respect, what's happening. So let's see. Here I'm trying to present and I can't present. Here we go. Just take a look at this final kind of slide here. So this is the estimates of what's going to happen on Wednesday. So Nomura thinks it's actually a actual negative 25 basis points, the rate cut. Barclays, Credit Suisse, they're still alive, and Goldman Sachs says 0, nothing, pause. And all the other banks are thinking there's going to be a 25 basis points. So I think I see this as good news and bad. If it's a 25 basis points built in, maybe. But I really do want them to pause it so that there's exactly what you just said. Do not cause any more scare in the bank run scenario. Raising it now would be just the absolute incorrect thing. So what's your expectation and what do you want to happen?
I think a cut would be not received well
right
by the market. I think that would be a surprise, and the market doesn't like surprises. I think a pause or a 25 increase and in indication that there is a pause after that 25 is what the market wants to see. In fact, probably the Goldilocks scenario is a 25, and then the press conference says, or in the written statement, we're pausing at this point. We're going to look around. We're going to drive stability in the banking system. We're focused on inflation. We've done great work on inflation. I think the last PPI shows that. The prior CPI is significantly lower than the prior month. In fact, the January PPI was adjusted lower. People don't talk about that, but the January PPI was slightly elevated, and that was re-looked at and adjusted lower. We know February came in much lower than planned. So there's some data for the Fed to hang their head on that says that they've done a little bit of a job on inflation, and it should, while it's at upper 5-6%, it's on a good trajectory down. So let that play out, let that happen. So yeah, that's what I believe. 25 and an indication of a pause is key. The areas I'm looking at are the jobs market. What's going on with the banking sector? Is there some stability here? Is there another announcement? There's an announcement today that there was another attempt to save FRC. So once those headlines start, hopefully tailing back on the banks, and the third thing I'm looking at is the housing sector. And there's a number of things you could be looking. You can look at the auto loan sector. There's a lot of things of concern out there that these rapid rate hikes could have driven a lot of underlying damage that just hasn't been uncovered. So I think 25 and a pause is a prudent thing to do. And I'll also be interested to see what happens if there's a new dot plot this month. I don't know if this is the month where they put a new dot plot. The dot plot is where the Fed projects they see they see the rates going through the end of the year. It'll be interested to see if there's a new one published.
Which of these scenarios is best for Tesla stock, or does it matter? It's going to hold
25 and a pause.
Yeah.
No, I think 25 and a pause is important for Tesla. I think the Q1 P&D and the Q1 ER is important. I think that we could have an earnings surprise potentially. It's not maybe not from the auto side, but more of from the energy side. It's possible. We'll see. It's early
operating margin
in that cycle.
Yeah.
And I think the other thing with Tesla is now, earnings is the third week of April. Cybertruck, is every week we pass, we're a week closer to Cybertrucks being on the street. And I think I think there's going to be a sentiment shift in Tesla. There's going to be so many thousands of cars built. I get it from a balance sheet perspective. But I think there's going to be a sentiment shift when those vehicles are on the street, and the hype around deliveries and the hype around who's getting the first deliveries and where are they, and the fact that Tesla will be testing more of these in the street. I think it's going to change the auto landscape significantly, and people will be looking ahead a year and saying, all right, maybe they're only going to do a couple thousand in 2023, but my God, what are they going to do over the next year? They've got an order book of over 1.5 million cars. Maybe not all of them come to, there's going to be some loss in that, but that's unprecedented in terms of a wait list.
I know you've been very optimistic about Cybertruck, but I think right now it's next month is the earnings call. That's the thing we're all waiting for. Okay. Yep. Thank you so much, Jeff. Appreciate it.
Thank you, Herbert. Thanks, everyone.
Next Monday.